Hello everybody, welcome back to another live trade recap for 17th of March. Today is Monday of the new week. Now you're going to see a lot of colorful drawings on the chart, but let me quickly take this away just to show you what the price action looks like here. The middle one here is the 5-minute chart. We opened up at 9:30, which is this candle, kind of did a retracement at the bottom here and then went all the way back up for another rally. So what's going on today? What's the trade that I took today? Now at 1 we had a beautiful setup, but I was having lunch, so maybe I should start having lunch at the desk and maybe a little sooner. But that aside, today my trade was a very micro scalp. So if you've been following along, I was trading demo prior, but right now I am trading live, a micro account. By that I mean I started an account with like $770. So I'm gonna play very cautiously, especially at these areas, and we'll get into that a little bit. But what you'll see is I basically took a very micro scalp going down right here. This is the trade. And surprisingly enough, for my account, I'm trading 2 MNQ contracts, risked about $71, made around $145 based on fills. So that's actually a pretty good amount, especially considering I'm just getting back into live trading with a macro account. I don't want to really push it, especially at these areas. And if you'll notice, our trade setup played in again. Again and again, we keep saying our trade setup show itself to us, and it's beautiful. So when we opened up, this is New York Open, we just rallied at this point. Rallied all the way up. I was looking for these as a liquidity sweep. Oftentimes you'll see price come up, grab liquidity, and then go all the way down. So just waiting. There was no trade in here for me at this point. We were a little too late. There's no trade here. Okay. If I was to get in, I would have gotten in here, but the first few minutes of market open can be very wicky, and I don't want to get wicked out. So I waited for a proper setup. At our 1 hour zone, this is our 1 hour bearish fair value gap. What did we notice? We saw price come up and then start going down. And as you can see here, this is where I saw a micro lower high. This is confirming our character of the 1 hour. We came up, tried to go up again, really couldn't do it, started breaking down. Okay. Again, to be honest, maybe there was a better trade throughout the day, but I saw it as a very micro scalp. The RR kind of lined up. It's a 2-hour trade, risking $70, making $140, and that's okay for me. As it was coming down, I got in on this candle right here, on the break, on the momentum, on breaking this 1 minute bearish fair value gap, turning it into a inversion. Right at this point, I didn't know what price would do here, and there's a good reason why you'll see that my price target was down here. This was my price target, but then I quickly changed it to here. You know why? Because we had a lot of bullish gaps over here. Bullish gaps, and then we were in a very choppy price area. Even though we saw this clear move up, this is still a very choppy price area. We are wedged between a daily fair value gap inverting here, and then we are also aligned with coming out of a 1 hour bearish gap at the bottom, and then on the top we have a 1 hour bullish gap. So price is really fighting in this range, and when I show you the daily chart, you'll start to understand why. So with all that said, I didn't really want to push it today. I know price can chop around. I don't want to get wicked out on a micro account, especially when I'm just starting off. This was a very quick trade, 2R, and I targeted this dotted line, which is the top of my 4-hour bearish gap. It played out really well, really fast. And then obviously we have our lower highs. We have our price being at a point of interest, which is this 1 hour bearish gap. And then we have a nice profit target down here. So I'm happy with that. Let's go over some other things about the trade, right? Because this is a trade recap. I'm not just telling you what trade I took, why I took it. But let's go over the trade, over the day, right? You see this kind of price action, right? Especially if you look to the middle. This is the 5-minute chart. Look at this chop right here. Look at this, right? If I take over all the drawings, you'll see this chop, we're just barcoding at this point, and this is very hard to trade, especially noting these candles are fairly large. And I'm not trying to get chopped up. I'm not trying to take a million trades. I just want to take one, maximum two, and stick to my risk management plan. Okay. And one thing that I'd like to show you is eventually it did hit the price target, but I didn't want to risk that much money. I wanted to take one trade. I was still looking at price. I'm like, it's starting to show really good price action. It came down, went all the way back up, right? Starting to show another lower high. All of these things are playing off, but I didn't want to take another trade because I already took one, closed it off. Just wanted to stay away from this. What you'll notice is along with our confirmation, we have primarily our lower high confirmation or higher low. It's confirming character. We have our point of interest, which is the high time frame fair value gaps that we'd like to look at. And recently, what I've been noticing is that at these fair value gaps, at these point of interest, you'll start noticing dojis. Now, not all dojis are effective and tell a story, but the dojis within your POI are fairly effective. It kind of gives you extra confluence, right? So these arrows you see here, I've marked out dojis that I've noticed. So if you look at the 15 minute, this was, to be honest, the clearer day trade. So it's at our POI, it went up, price was up, and then I expect it to come down. If it's bullish, which it is, order flow has changed, right? We expect it to come down to our 1 hour, and look, a doji, 15 minute doji, and it never went below this. Here's another one. As it's coming down, here's a bearish 5 minute gap right here on the 5 minute in the middle chart right here. And then what you notice, another doji. Who would have guessed, right? And then, so here's the 2 minute doji, right? Lower low, again, a cleaner setup. If you look at the very right side, we have a much clearer setup. And then look at that, another doji. So a doji is actually something I would like to take a look for. And I actually added an indicator which highlights the dojis. I didn't have this during the trade. I actually added this when I was taking a look at the charts after market session. Another thing I want to take a look at is the 1 p.m., right? Look at this beautiful move. The reason I want to take a look at this is because I'm a little salty that I missed out on this. 5 minute inversions, very clear, 1 hour bullish gap retest, and then we're going back up. That's as clear as the edge gets, right? Here's a bullish gap on a 1 hour, and then it comes back, doji 15 minute. Here's your 5 minute fair value gap. Here's a 5 minute inversion fair value gap, 1 hour bullish gap, and it's just perfect, right? If you take a look, here's the 1 hour, this blue, this is 1 hour. Price comes back, creates a 15 minute doji, goes up, and then here's your inversion. We could have taken this trade, and that would have been really nice. We could have taken this trade, say above here as it's breaking out. Risk just a bit below our 5 minute inversion, and we could have easily targeted this high, the day's high right there. Right? That's the most obvious liquidity point. Could have easily done that. Right? If you're really ballsy and you look at price pushing up, the next obvious liquidity point is actually right here, right where price rejected. You know why? Because this is the top of the 4 hour. This is the top of the 4 hour bearish gap. That was a beautiful price target. The reason I'm salty is that this setup was so much more clean and so much clearer than my first trade that I took, which is really tiny, that you take a look at. But then you see this trade, and it's so beautifully made. 890 ticks, right? And on 2 contracts, tick values are essentially dollar values, right? Risking 124 to make 890, that would have been a beautiful trade. So this is something I'm gonna keep an eye out for, the 1 p.m. session. Seems like we have a lot of good positions playing out. And with that said, let's go and let's take a look at the live trade that I actually took. Again, as salty as I may be, I'm actually very happy because I really exercised my patience. I saw this bullish run up, didn't take it. I waited for a confirmation, albeit not the best confirmation, but a very quick momentum confirmation. Micro lower high at our point of interest at the 1 hour bearish gap, and then targeted the most obvious point of liquidity. Now, this was also a risky trade. That's why I didn't target the very bottom. And it's a good thing I didn't, because I would have gotten stopped out at these candles right here. And it's good because I looked at price and I understood that the market environment today is most likely going to be choppy as we're reversing on the daily chart. And let me show you the order flow. So the daily order flow, if you look at the very right hand side, we have been on a downtrend ever since the 20th of February. And only now are you really starting to see a base forming on the daily chart, a base, and then we're trying to go up. But what you'll notice is if you do a high time frame analysis like I do every morning as our morning routine, you'll notice this is a bearish daily gap. And we've been rejecting this gap a lot in the past couple sessions. Let's take a look at the 4 hour. Another area of point of interest are formed. Look at this, bearish gap, 3 bearish gaps right here. This is a lot of selling pressure, a lot of selling orders sitting around. We could easily test all of these, right? We could confirm all of these. As you can see in the previous sessions, we tapped here, but we just can't seem to break it. Even over here on the Friday, 14th, we tapped and we went down. So with all this going on, I acknowledge that if I was to trade this, it's not gonna be super clear. So it's gonna be very choppy. That's why when I took my trade, I made sure it was a very quick scalp to the most obvious target, not my ideal target, which is all the way down here, because I don't know what kind of wick action we will see. And we've seen a lot, right? You see this crazy rally in the morning, market open, no opportunity to get in, and then this drop. Then we're like, okay, so are we going down or going up? Well, we came back up it, and then this fair value gap is fairly negated at this point. We go down, but we come back up again. Right? So these kind of choppy market environments, I want to be very clear, especially because I'm trading live. Just be super clear, take the base hits, and that's okay. Afternoon session, we did see a good move. I would even say the sell-off was pretty good move, right? Doji on the 2 minute. Here's your profit target. We kind of like chopped around here, but it's still a fairly good move. Okay, so with all that said, let's go take a look at the live recap. It's very short, very quick. I'm excited because the system is playing out perfectly. My confluences are always present, getting setups basically every day. And slowly now with live account, I want to be cautious, but with base hits, slowly grow the account, right? I don't want to do anything risky and then lose like half the account by tilting, right? That's why I stick to my risk management. And all in all, it's a very good day. A lot of lessons learned here today. A lot of lessons on patience and just relaxing, reminding yourself that your edge works, so you don't have to FOMO, you don't have to tilt. It's okay. Follow your risk management plan. So $700, risking only 10%, still fairly aggressive, but I was okay with that, but not more than that. If you haven't already, go ahead and subscribe to me on YouTube. Go ahead and follow me on Twitter. That's where I post most of my work. And then I will see you guys on the next one, not tomorrow, but the day after tomorrow.